Hey everyone, it's Matt with EquiPredict.com. Thanks so much for checking this video out. In this video, we're just going to cover quickly the current fixed cycle that's present in the Dow Jones Industrial Average and talk about kind of what's happened historically this year in 2024, as well as what is likely to unfold. And so again, if you're enjoying some of the content we're providing, please do subscribe to the channel. You can also head over to our website, EquiPredict.com. We have a whole bunch of information over there regarding market forecasting. And we do send out to our readers an occasional EquiPredict alert, typically quarterly or even slightly more often than that. So it's EquiPredict.com. Up on the screen here, we've got a chart of the Dow Jones Industrial Average. And what you're going to notice, I don't have the S&P and NASDAQ lined up right here. These are the three major indexes that folks tend to follow. And you're going to notice that the Dow Jones is actually showing a relatively stronger chart pattern, and that is good for the Dow Jones going forward in terms of strength. And you can argue it's actually not so good for the NASDAQ because the NASDAQ is actually looking weaker than Dow Jones right now. And so the Dow Jones typically resonates with the more value-oriented stocks. The NASDAQ has obviously got looser requirements to list, and that's usually associated with growth stocks. So just something to keep in mind and bear in mind as we curl into 2025. So as we go into the last quarter here, into the new year. And so what you're going to see is I've just overlaid, this is a chart pattern you can use, I think, just about any particular software out there. I think even Yahoo offers like a sawtooth or fixed cycle pattern that you can go ahead and overlay, maybe TradingView as well, I'm sure. And what I've done here is just pointed out since the beginning of the year, the first quarter, the sawtooth pattern of the fixed cycle, these larger patterns here have worked out really well for the Dow Jones in terms of understanding kind of how it's going to unfold, where the turning points are. And that's one of the base lines that we start with is really the fixed cycles at EquiPredict before we go ahead and kind of deeper dive into a deeper analysis into a particular stock. We're not going to be talking about the EquiPredict forecasting model in this particular video. We do use that once we kind of move past the fixed cycles. And this is a fixed cycle that's just sort of picture perfect for us to take a look at. It's about as good as you can get for an index. And so what you're going to see is that each one of these major turning points, or each one of these major highs and lows, or the peaks and troughs of the major cycle, was a pretty decent turning point for the Dow Jones, for the stock market essentially. And so what you're going to see is this is going back to late March, early April, or I think this might be mid-April. We had the downfall, but it also aligned perfectly with that peak. And you can just see here, and I'll just point out that each time you get to one of these peaks and valleys, the market sort of has a turning point. We call these inflection points, essentially. It doesn't mean something's guaranteed to happen. It's just a point in time that we want to go ahead and look for something to happen. At this particular peak, and because the cycles, the fixed cycles, these human-made cycles are not perfect, you can get to a peak here, and if you decide to go short thinking that it's just going to go ahead and follow through to the downside, you're certainly wrong, as you can see, because this just took off. But what you're going to notice is that at this major low down here, the trough here on the fixed cycle, the market came back down and hit it perfectly and then rose. And so here we are at the next peak that just happened as we turned into September. So just something to keep in mind when you're looking at fixed cycles. They're not guaranteed. The way to go ahead and use the fixed cycles, if you're not going to be getting into more of a dynamic cycle, or if you're not one of our readers over at the EquiPredict model, you can actually, what you could do is essentially here is once you get, let me just erase these lines here so you can see, once you get to these market peaks here, or these cycle peaks here that you believe is going to be a turning point for the market, go ahead and draw a trend line in. All right, that's going to be, because again, you always want to lean on price as your final and ultimate decision. Don't take you can take your signals from your indicators, but my strong recommendation is go ahead and take your triggers from the price. You can hop down to a lower time frame and look to see if it's starting to break down. But this one, again, as you can see, never broke down. At this particular point in time, the cycle ended up inverting for a short period of time. So you wouldn't necessarily, you can go ahead and take a short position here, but you're going to have to place your stops above this last peak high. You would have gotten stopped out for a loss if you went short. And so just something to just bear in mind. What I also did here is I overlaid a secondary harmonic on this particular major cycle, and you can see that it does also provide an additional guideline, additional minor turning point location on per each one of these dates. It doesn't line up perfectly, but it does an okay job at kind of giving you an idea that there's actually secondary cycles inside of the major cycle. So I hope that kind of makes sense. And so it's followed this relatively well. And what you're going to see here is that we have another cycle low coming up just around, I would say, this week coming up. And, this is not a cycle low that I would go ahead and get very bullish on. I wouldn't say this is going to be a great turning point. Price could come down a little bit below 40,000 and, could it rocket up? I assume it certainly could. Anything's possible. The stock market has a lot of different tricks up its sleeve. However, I really would believe this is going to be more of a sideways consolidation, maybe a slight rise, but then you're going to end up having the Dow Jones come into this major cycle peak, major cycle low, this trough here that also aligns with a secondary cycle low. And this is just as we curl into October. It may be a little late. You may end up getting a rise in the Dow Jones Industrial Average just after the October 10th or so, but I believe this is the cycle low to be watching going forward. And I'm just going to actually hop down so you can see it a little better. A little better on the smaller time frame here. This is just a zoomed in view. You can also see that we've overlaid here a money flow index. This is available on just about every platform as well. And every time the money flow index gets up to these peaks here, it's not really a great time to go ahead and take on long positions. You want to be getting it down below 30 if possible, closer into the oversold readings on the money flow index. That would be just below 20, I believe. So you want to be looking for that. I would be kind of looking for a combination of the cycle cycle troughs coming in here just after we turn into October. Look for your money flow index or another momentum indicator that you're comfortable with that gets into an oversold territory. And that will be a particular point in time when you should consider taking on long positions going into into December. Once we get into December, that's when it starts to get a little dicey. The forecasts are actually kind of pointing to potential sideways consolidation or potential downside move in December, which is, I think, a little unusual, but nonetheless, that's what the forecasts are telling us. So I hope this helps to understand that there are fixed cycles. These are human-made, and I hope that it kind of gives you some guidelines and a roadmap for how things may unfold for the rest of the year for the Dow Jones and the general stock market. So happy trading, good luck, and be careful out there.